All right, so I haven't come up with a good way that I want to badger Glenn for making me redo this. We are redoing our second mortgage video because G-Money told us we aren't in compliance. So, I do want to caveat that second mortgages are portfolio products. They are held within banks, so they're going to vary greatly based on, risk and the economy. We'll hear of second mortgages being taken off the table sometimes. So this is an ever-shifting landscape.
This could be a lot more, it might not be just such a simple...
We're going to give you some general information here, but you're going to want to reach out to your mortgage professional to determine what's available to you at your point in time. Back to second mortgages, or, what are we back? I guess. All right, so we've got two types of second mortgages. We've got our HELOC. Let's think of our HELOC like a credit card. You are going to apply to open up a balance. So let's give the estimate just for speaking through this. I hope this is in compliance. And you are going to have an open period. In our example, let's use a 10-year open period. So during that open period, you can borrow and pay off as much as you like up to your limit. In our case, this bad, compliance, bad. At the end of the open period, the remaining balance is going to lock in, and you will generally start making principal and interest payments at that time. In our case, it might be 20 years. It really varies. I am currently in a HELOC that has a 6-year open period and a 14-year payback period. So that is a HELOC. A HE loan is going to more closely resemble your current mortgage, where it will be a principal and interest fixed, generally adjustable rate, and you will make payments every month starting about 45 days or so after you close on it. So this is going to be, again, terms will vary, but generally, they're going to be a 30-year term, but I've seen options where it can be 10, 15, 20. Again, as we discuss second mortgages, we need to remember that landscape is constantly changing. So now we've talked about the two main types of second mortgages, HELOCs, HE loans. So what are we using them for? We can use them for both purchase and refinance transaction. A purchase transaction, the second mortgage is going to be used in conjunction of the first mortgage, and the general goal is to reduce the amount of down payment you have to come out of pocket for. So that second mortgage is going to be known as generally a piggyback mortgage.
Piggyback, bam! Piggyback, bam!
So it is piggybacked on the first mortgage, and we are able to purchase a home. Let's say without a second mortgage, you might need 20% down. With a second mortgage, you might need 10% down. Again, these are examples. You're going to want to check to see what's available to you at the time. So that's how we're using a second mortgage as a purchase. I would like to note that I've seen both HELOCs and HE loans used as part of purchase transactions. So again, you're discussing with your mortgage professional what your options are. In a refinance transaction, generally it's going to, a second mortgage will be used when we want to leave our first mortgage in place. So let's say we've just gone through the pandemic where we have a large portion of people at the 3% interest rate. They don't want to touch that, but they want to gain access to their funds. So you might use the HE loan in an instance where you need to make one large additional outlay and you want to start paying that off immediately. Let's say you are getting, a rear addition put on, and you've got the equity in the home, and you would pull that out with a HE loan as a lump sum. You'd have those funds, and then you'd be able to pay for the addition. A HELOC, on the other hand, is great when maybe you have some little things that need to be taken care of, nothing pressing. You've got that open period, so you might open it, initially redo the roof, pay that down. Oh, we need to get new appliances, use the funds available to you to make upgrades of the home. So generally when we talk about refinances and second mortgages, we're talking about gaining access to our equity. So I hope that our compliance acceptable video has been helpful for you today. I hope everyone's doing well. The mortgage investor here. You know what to do. Like, subscribe, and hit that Taco Bell button. I'll see you soon.